Domestic markets closed in the green yesterday as softer U.S. jobs data raised expectations that the U.S. Federal Reserve might cut interest rates this year. Here at home, Stats SA also published data that said manufacturing production dropped 6.4% in March. Let's talk about this and other stories with Carmen Mpelwane, who is an independent analyst who joins us now. Carmen, good morning. As always, we start with an overview of the latest market moves in early trade.
Morning, Iman. As you've mentioned, we've been in the green for most of the week, and that's continued this morning, up about 87 bips. Definitely a tailwind that has come from those lower non-farm payroll numbers. But I think the sentiment remains that we need a few more data points to show that we're moving in the right direction, which is economies are weakening, before the sentiment changes around the fact that we are likely to see the Fed keep the interest rates higher for longer.
So we're still talking about oil today. It's up again, and it's set for a weekly gain as data this week from the US and China pointed to higher demand. So what does it tell us about the future of fuel prices?
So we are once again seeing the macroeconomic impact of what's happening across the globe. So specifically, the breakdown in the ceasefire talks has given a boost to this oil price. As you've mentioned, China has seen an increase in growth in its exports and imports, and then adding to that, that we're seeing in terms of the US as well. So the focus here is definitely going to be what is happening internationally and globally. What are the political impacts, and that definitely has a impact or collaboration with the oil price. It's difficult to say which way to go, but we are likely to see a weekly gain for the first time in several weeks for the oil price.
Let's talk about RFG Holdings. This is the food company which says it expects headline earnings per share to be up between 18 to 23%. Let's talk about those numbers.
So definitely a positive number, and we see the share price open in the green this morning. Despite the fact that we know that we have a struggling consumer in South Africa, they have managed to counter the slowdown in volumes by ensuring that there's been an increase or a price inflation increase. Adding to that, management has consistently said that they are focusing on the operating inefficiencies and cost containment, and that's given support to the operating margin and therefore the flow down into the headline earnings per share growth as well.
I want to end on the mines. Mining group DRD Gold also has an operating update for the quarter that ended in March. Let's talk about their numbers.
So they've come out with a revised production guidance. And this is towards the downside. The basis of that has been that they've guided that there's been a later start at 2 reclamation sites, and that has impacted what they are expecting from for the full year. Having said that, you keep in mind that we've seen a definitely stronger gold price over the last quarter, and that's given a boost to the group. However, they have guided that their operating cost is likely to be exceeded as well.
Carmen Mpelwane, thank you very much as always for joining us and for sharing your expertise. We appreciate it. Enjoy your weekend as well.